Hey everyone, it's Steve Kornbluth here at SafeBridge Mortgages. Back again, wanted to talk about what happened yesterday with the Bank of Canada increasing their prime lending rate 2 times now in a row, which hasn't been done in about 10 years. So something must have drastically happened to make them want to do that, and something did, and it's called the GDP growth. GDP in Canada grew by 4.6%, which blew everyone's predictions out of the water. No one had anticipated the Canadian economy growing so quickly, so fast, so big. So essentially, the Bank of Canada had no other option except to increase the prime rate, and that was either going to happen yesterday or it would have happened this coming October. So now that we've had 2 increases in a row, that now offsets the emergency rate cuts we saw back in 2015 when the price of oil plummeted, and the Bank of Canada dropped the rates to stimulate the economy. So now the economy is humming along. Where are we going from here? Well, when we saw the Bank of Canada increase the prime, what we saw is our Canadian dollar increased to a 2-year high at 82 cents. What does that mean for our exports now? Exports will be impacted by this because it's going to make it more expensive for other countries to buy our goods and services. When you're increasing your prime rate now, you're taking more disposable income away from consumers. So this is going to impact consumer spending. Consumer spending last year was a big part of our GDP growth, a big part of our economic engine. What's that going to look like in the next 4 to 6 months? Are people going to start spending less money on goods and services? Probably, now that they have less money to go out there and spend it with these interest rate increases. The housing market. Housing market was actually also a big part of our GDP last year too. Our housing market was on fire. Now we're starting to see it slow down a bit, right? So that's going to impact our GDP growth too. As well, housing market might slow down even further because now we're starting to see fixed rates sort of creep up. When the Bank of Canada increased their prime rate, that increases the bond prices, which is what the fixed rates are based on. So we're starting to see fixed rates increasing. It's going to mean that people won't be able to get qualified for the mortgages they want, possibly slowing down the housing market even further. And let's not forget about Trump. We're in the middle of our NAFTA negotiations, and he's again threatening to rip everything up. So yeah, we'll see what happens with that. If he does rip it up and they impose new tariffs and taxes on all of our exports, that's going to hurt our economy too. So we kind of have to wait and see. The governor of the Bank of Canada had basically said that he doesn't anticipate our economy growing and sustaining at that pace, and I tend to agree with him based on, I think we're going to see a lot less consumer spending and our housing market's going to start slowing down. So the economy is going to slow down. Unless there is some strong economic data coming out, I think that the interest rates are going to stay where they're at for the next little while unless there is some new data that comes out indicating otherwise. He doesn't want to, shock the Canadian consumer with another rate increase because then people will definitely start to grab onto their wallets and not spend money as freely as they used to. And that's not exactly what he wants to happen. So that's sort of my 2 cents on the increase yesterday. People are asking, should they lock into their mortgage or not? And it really depends, what kind of rate you're going to get when you convert into a fixed. If you still have a relatively big gap between a fixed and a variable, my advice is to stay with the variable. I'm in a variable right now. I'm not looking to move. I'm going to be around 2.55% on my rate, and I think if I lock in, I'll be around 3%. So I'd be jumping up 0.5% if I were to lock in now. And again, I don't see that there's going to be some more drastic rate increases coming in the near future. Again, unless there's some new economic data that's coming out in the next couple months indicating otherwise. But if you have any other questions, feel free to give me a call, 416-659-7128, or just reply to the email. And if you found some value in this video and email, then please feel free to share it with some friends and family. And if they have any questions, I'm happy to help with them too. Okay, thanks for watching. Have a great day, everyone. Bye.